Good morning, traders, and welcome to Daily Call today, Friday, the 9th of March. Before we get started, as always, please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Okay, let's have a look at what's happened yesterday. And locally, our trade balance surplus increased to 1.06 billion, up from 0.21 billion. And surprisingly, not much reaction in the Aussie US dollar as it continues to hover around the 78 handle. From Europe, interest rates were not changed, so they remain at 0%. But the big news was in the statement release from the ECB, and essentially what they've said is that they're now dropping their long-standing pledge to increase bond purchasing. In other words, what that basically means is that they are moving towards easing back on their stimulus program. It should, in theory, increase the strength of the euro. However, it did actually drop around about 100 pips at over the hours after the release. So there you have it. Okay. Time to have a look at our chart of the day, and the chart that I found for us today, well, actually there was no setups today at all, and rather than give you nothing, I just thought I'd show you something that's quite interesting. This is the Kiwi US dollar on a daily time scale. Typically the way that this pattern works is it'll come from underneath, it'll hover around the consolidation zone, and then basically shoot off into one direction. So, and just let me show you with my pointer, one moment. So typically, and then basically just shoot off in that direction. However, since if you go and have a look at this particular chart, it comes from a higher level, comes down here somewhere and does this. I've just cut that off. Because it is coming from the higher level, it does also open up the chance that it could possibly break down towards this way as such. So what I've actually highlighted for us is over here there is an inside candle situation, and if we were to attempt to trade this on the basis that it could be the start of a new trend going downwards, basically moving down as such like that, if you do happen to take that trade and you hang through this zone, through the break zone, it could actually provide for you a larger reward than what would normally be expected. But there you have it. That's an interesting chart for us to look at today. It's not a trade setup for me at right now, but just letting you know in any case. All right, let's have a look now at what's happening in the session which is about to kick off for us. We have from Japan, monetary policy statement and their press conference. Now that's tentative, they haven't specified a time. Look out for it around about 1 p.m. Australian Eastern Standard Time. We have at 8:30 tonight from the UK the manufacturing production numbers, and then just after midnight at 12:30 the big one. We have from Canada employment change and unemployment rate numbers, and of course at the same time simultaneously from the US we have non-farm payroll employment numbers and figures coming out too. If you trade the US CAD, it's a double whammy, so look out for high volatility tonight. Non-farm payroll always is a time of high volatility. If you've never seen it in action, just log in and take a look and see what it does. As always guys, please feel free to contact us if you do have any questions. Follow me on Twitter at ChatFX for trade setups and breaking news. Most importantly, hope you'll have a fantastic weekend. Have a great trading day. I'll talk to you on Monday for the Daily Call. Bye for now.